Thanks a lot, Somi, for joining in with that. That's, of course, the new segment that we've introduced recently on ET Now, Words from the Wise, who's saying what when it comes to the equity markets. Now, the chemical sector, boy, has that been a hot one, since the outbreak of the pandemic. We're now going to be touching base with the top management of Vinati Organics, Vinati Saraf Mutreja, Managing Director and CEO of the company, live with us right here on the market. Good morning. Thank you so much for joining in. Should we begin with the hot topic, which is, of course, to do with inflation and operational costs? How has that been for the company, the costing? How have the margins been panning out, and selected price hikes also that had been introduced earlier?
Sure. Good morning. I think that's a very right topic to begin with because in the last year or so, cost on all fronts have gone up, whether it is raw material costs, which are mainly crude driven, freight costs, logistics costs, utility costs coming up from coal, steel commodity prices going up, which means CAPEX costs have also gone up. Now, some of these costs companies like ours are able to pass through. For example, freight, raw material cost increases because we have formula-based pricing with our customers. So in line with that, our end product price has also gone up. Some we have to absorb because there's only so much our customers can absorb. For example, utility costs because we have a fixed overhead, and that's part of that. CAPEX, of course, has gone up for all companies. So we just have to deal with that and live with it in the near term, I guess.
So, what's the larger message then out there? Because this is the burning issue, right? You're seeing pick up in volumes, so will margins improve going forward?
No, so definitely along with these cost increases, at least we are seeing a good volume pickup, good demand for most of our products, whether it is ATBS, IBP, butyl phenols, and hence we are able to normalize some of that, which means profit may not be a problem. Now, margin is a very misnomer. I don't know why analysts and TV anchors question so much on margin, because margin is just a percentage of the sales price. And as costs go up, sale prices also go up. So margins do come down in that sense, even though the absolute profit remains the same or increases if the volume increases.
Okay, so I won't get into margins. I'll talk about a derivative of margin, which is return ratios. Ultimately, okay, margins are a function of cash flows and the return ratios. Typically, what happens to your cash flow and return ratios in a high inflationary cycle?
See, now return ratio, you mean profit as a percentage of turnover, right? So that will come down. But for specialty chemical companies who are able to pass through these costs, I think they're more or less the same. Also, volume has picked up. So when demand goes up and you start producing more, spread over the fixed expenses get spread out over a larger volume. So that also helps the margins. So net, there is not much change in margins for specialty chemical companies, in my opinion.
How many of your product categories currently are going through what could be called as supply adjustment or supply readjustment, whether it is because of China or whether it is the way how energy and supply chains are moving in the world?
So what's the question here? Sorry.
Right. My question is that how many of the product lines which you have are going through a complete change in terms of supply and in terms of manufacturing changes? It could be China, it could be Europe.
Yeah. Okay. So we don't, for example, in IBB, we don't compete with China. We actually supply to China. China is a market for us. And that has picked up, and that has, insulated from sort of the China story, because it's used to make ibuprofen. Ibuprofen was down last year during COVID, and it is the demand's picked up again. Now coming to ATBS, where we do compete with China, there definitely we see a strong push coming from customers based in the US, based in Europe, who want to buy more from an Indian supplier. They do buy from the Chinese supplier also, because there are only three manufacturers in the world, and there are extra duties from China as opposed to those from India. So we've definitely benefited there. Butyl phenols, again, there are manufacturers in China, India. We are the only one in India. We see good demand coming from Europe and US, as well as local, where we can substitute some Chinese demand.
So with supply being, constrained globally, being disrupted globally, can you tell us, companies like yours, Vinati Organics in particular, what is the focus on right now? Is it just to, have the supply solutions figured out? And is that where a lot of the incremental CAPEX is going, or is it also going in for capacity addition, etc.?
No, so the CAPEX is definitely going in the capacity addition and adding new products, because we see good demand for our existing products, and we have 4 or 5 new products in our pipeline. Now, coming to the supply issues, yes, freight and logistics is a challenge. The days taken for goods to reach has increased, so one has to plan further ahead. We encourage our customers to place POs much earlier than they used to. We have to start booking containers and take shipment bookings earlier than we used to, other than the cost increases in the freight, which have probably gone up 5 times in the last 1 year. So it just requires a lot more planning on the end of the consumer as well as the suppliers.
You still hold on to your guidance of doubling revenues by FY25, just given the way things are changing so fast, so rapidly?
So things are looking positive. Like again, I said, the uptake for our products is good. We expect to grow 15-20% volume-wise year on year, which could translate to doubling revenues in the next 3 to 4 years.
Okay, that's Vinati Organics for you. The stock did hit a 52-week high just last week as well. We're getting in the top management on the road ahead. Our timely interview, just given the way we're seeing supply solutions being disrupted, the way prices of raw materials are also going up. Thank you so much, Ms. Mutreja, for joining us live today.